One second while that's loading, I'll introduce myself. My name is Laura Azzalina Rigali, external CFO for startups and also a coach to entrepreneurs. Lots of help with solopreneurs as well, helping with personal finance and small business finance, funding, budgeting, vision planning, strategic planning, those great things that help us grow our businesses, grow our personal goals and our business goals, and just happier lives meeting our goals financially and personally. So I'm looking forward to working with all of you today. Before I dive into our content, I always like to hear who is in the group so that I can sort of tailor as much as possible the content that we're covering so that it meets your needs. So if anybody would like to jump in and tell me what to get out of today's session, I would be very, very happy to tailor the content for your needs. Anybody want to offer some insight into who you are, what business you are in, and what you're hoping to learn? Any brave souls? No? Please, yes, Laura, go ahead.
Hi.
Feel free to unmute yourself. Yes, hi.
So my name is Laura Stahl. Hello, everybody. I am primarily a voice actor, but I live basically in the freelance world. And I think all that I'm really kind of looking for is to understand a little bit more about budgeting and living life as a freelance person and dealing with, those ups and downs, because there's ebbs and flows to business, of course, as with everything else. And, when you are your own boss and you are creating your own business, then there are those interesting complications of not having that regular 2-week paycheck, salary, what have you going on. So that's kind of where I'm at. Does that work?
Very helpful. Thank you. Nice to meet you. Anybody else?
Hi, my name is Judy. Excuse the fan, it's just brutally hot in here. So if you're hearing a hum, it's because it's brutal. It's been brutal these past couple of days. Hi, my name is Judy. I'm an audio engineer as well as a voice actor, so I work in 2 freelance worlds. I would love to get a little bit more familiar with the best ways to budget myself, kind of. There's a lot of personal expenses I have to make for both sides, and I would love to just be a little bit more tax savvy. And I have a couple of questions about, working as an individual as opposed to a DBA, and incorporating and all those like very vague things to me, at least. So I would love to just get some clarity on those kinds of things.
Okay, great. That's very helpful. Anyone else want to share some upfront goals for the session?
I'll go. Hi, I'm Veronica. I have 2 different professions that are completely different from one another, and I'm trying to figure out how to best market myself that way. I am a voice actress and I am an industrial designer, and that's what I went to school for. And I think part of the problem is trying to figure out, where do I fit in all of this, and where can I get a piece of this, and kind of get better at my craft, and just kind of learning more things as I grow.
Great, thank you. Anyone else before we move on? Any other goals? Okay, well, we'll start with that. That's a really great, those are all very on target for what we're planning to talk about today. So Laura, you kicked us off by saying having a solopreneur business is kind of like being a business owner, but some of the complexities of being freelance and having inconsistent income, timing, all of that great stuff. And I'm so glad you said that, because that's really one of my major objectives for today, is to get us to be thinking about our work as a business. Even though we work for ourselves from a legal standpoint, really you're running a small business. You have to think of business development. You have to be making sure income is coming in constantly. You have to be managing your expenses. And we have to make sure that that business is profitable on its own before we look at all of your personal expenses, like your rent and your phone and your car. And so sometimes we tend to forget that we really are running sort of 2 sets of financials, right? We're running our business financials, meaning the business income that we get from freelance work. And then we're running our personal financials to make sure that we can afford what fits into what that business is generating as net profit. So I'm going to talk a lot about business terminology today, but I don't want you to say, oh, that doesn't apply to me, because really it's the same exact thing, just maybe without some of the complexities of, being a public company. But really it's all very similar, and I want us to try to learn the same no matter whether we're working for ourselves and we're one person or we have hundreds and thousands of employees. So at a very high level, this is what I hope we can get through today. There's a lot here, so I'm going to skip over some stuff that I think is too detailed. And please, I'm very informal, so I want you to jump in if you have questions. If something doesn't make sense, don't hold your questions until the end. Let's treat this as sort of a working session so that you can all learn as we go. I won't be offended, I promise, if you jump in. So one, we're going to look at financials just to give a bit of an overview in case people aren't familiar with what your income statement should be, what your balance sheet looks like, because this really is what's going to show you how to be profitable. And I'm going to show you something called a break-even formula, which again, it's typically used for business, but it applies for you as well. So how we make sure that we're maximizing our profit using a break-even analysis. Can we work smarter and not harder? So I'll explain what that means in a minute. Just some general financial management tips, like create a budget, check in with your budget every week and every month and make sure that you're on track. Look at your goals every quarter and make sure that the goals you set that you're working towards are still the right goals for you. Do they still feel right? Do they still make sense? Personal finance tips, and then, as I said, lots of time for Q&A. We'll do Q&A throughout, but I also am going to try to leave 10 minutes or so at the end to answer anything that we didn't happen to cover. Okay, so let's talk about the income statement. Is everyone familiar with this? Have you seen something like this before? Yeah, a little bit of yes and no. So this is how businesses manage their financials. This is how we know if we are profitable or not. So the sales is obviously what you're charging other people. Cost of goods sold is what it costs you to generate that. So if we think of you as a freelancer, think of this as your hourly rate, right? This would be what you would pay yourself as payroll if you were an employee versus what you would charge to your client. So we want to make sure that you're building a profit margin in there, right? We want to make sure that you're charging enough that you have some money left over to cover all of your other expenses. So this top section is the most important section to be thinking about as you run your business, whether it's a small business or solopreneur business or giant business. Because if this isn't good enough, it doesn't matter how much you trim your rent expense. It doesn't matter how cheap of a car you get. None of that matters if the top number isn't good enough. Okay, so that's a whole separate webinar. That's a whole separate discussion about your market rate and charging what you're worth. But I will just put that out there. Don't give everything away for free, right? Don't undercut yourself, because you should think of how much a client is willing to pay me, how much their budget will allow, not can I just get this job and move on, right? So we'll talk about that in a little bit. But it's really, really, really important that you understand this concept of profit margin. And there's two different types of expenses. There's fixed expenses and variable expenses. Fixed expenses are flat monthly amounts. So for instance, your rent expense. If you work 10 times more that month, you don't pay any more in rent, right? Same for your car payment. If you generate 10 times as much income, you don't have to pay more for your car payment, right? So those are fixed monthly expenses that we need to manage every month. Then we look at something called variable expenses. So this fluctuates based on how much you're selling. That's this cost of goods sold number. So for example, if every time you produce 1 hour of work, you have to pay a subcontractor $50 an hour, then that would be a variable expense for every hour of work that you produce, right? So if you happen to work with partners or if you work with subcontractors that help you out, we would look at that expense fluctuating as your income fluctuates. So those are two important numbers to consider for this break even that we're going to talk about. So at the end of the day, we've got what you're charging to your customers or your clients. We've got what it costs you to produce that work. Then we have all of these other expenses. If we were a larger business and not a solopreneur, we would have what we pay our people. We would have our marketing expense. We would have rent expense, insurance, other office expenses. And then at the very end, what you take home at the end of the day. This would be what you have left to reinvest into your business, and what you could take home as a distribution if you're a business owner. So any questions on this? This is just a very high level of thinking of all the components of what can come out of your revenue and how high your revenue has to be in order to cover all of those things. I think sometimes if we look at it this way, we realize, oh, wow, if I earn $2 million and I only netted 15,000 at the end of the day, I'm working really hard to make that $2 million, right? I'm working really hard to make only 15,000 out of that. So maybe this cost structure is not necessarily favorable. So let's talk about that. I'm going to skip over the balance sheet because I don't think this is necessarily relevant for what you guys are hoping to learn today. But this shows all of your assets and liabilities. So if you own a car, for example, you would have a loan outstanding. Your cash balance is what you have available to pay for all of those obligations. If anyone has questions on this, please let me know, but I might just skip over this. That good? Okay, we'll skip over this one. So let's talk about break-even analysis. This is the most important thing you can think about as we think of how to maximize your profitability as a business owner. If you can learn this concept, you can create unlimited profitability, truly unlimited profitability, because you have the right formula in place. So let's talk about a cup of coffee as just a very common example that I think we can all relate to. We want to produce a cup of coffee in a way that produces the most profit for us, right? So if we think of the revenue, this would be the price that we're charging our customers for that cup of coffee. So let's say $3 to produce a cup of, to charge customers for a cup of coffee. That's our revenue per cup. Then we have to look at the variable expenses that go into producing that cup of coffee, and then the fixed expenses that go into producing that cup of coffee. Okay, so the variable expenses would be things like what? The cost of the cup, the milk, the beans, the little wooden stirrer, right? The sugar, the milk, all of that would be the variable expenses that go into that cup, yes? And the fixed expenses would be things like rent, right? Rent, salary for your employees, insurance, all those things that we just listed out. So the relationship between those two is where all of your profit lies, right? So if we have a huge burden, a really huge overhead expense, if our rent is really expensive, it's going to take us a lot of cups of coffee to cover that burden, right? We're going to have to produce a lot of coffee to cover that really massive rent expense. But if we're making a lot more money per cup of coffee, if our profit is higher per cup of coffee, then we have to produce fewer cups in order to cover that expense. So this is the relationship between those fixed and variable expenses that I was talking about. So really for you guys, you should be thinking about how high is my rent, right? Am I overpaying for these monthly fixed expenses so that I have to produce more hours of service revenue just to cover those fixed monthly expenses, regardless of what profit comes back to me at the end of the day, right? So if we reduce those fixed monthly expenses, we have to produce a lot fewer cups of coffee to cover those expenses, and then there's more money left over for our own profit. Everyone following this? So look at the relationship between your fixed expenses and how much profit you can squeeze out of each service hour that you're generating. I think for you guys, you're probably not paying any subcontractors, right? Out of the work that you're doing, it's just whatever you charge is the profit that you make. So we can ignore that concept of a variable expense and really just think about your fixed expenses. Okay, so let's make sense of that cost structure. If I use this as an example, let's say we have $10,000 a month as our fixed monthly expenses. So the rent, the payroll, marketing expense, insurance, and we make $2 of profit per cup of coffee that we sell. So we sold it to our customer for $3. It cost us $1 to make it, so we have a profit of $2. That means it takes us 5,000 cups of coffee to cover that 10,000 of expense. So to find our break-even unit, we would divide that fixed amount by the profit per cup. Okay, so that's how many cups it takes us to cover that 10,000. So this is just a demonstration of how big of a burden that $10,000 is. And if we can find a way to shrink that number, it takes a lot less cups of coffee to cover that fixed expense. So I want you guys to think of this in terms of your own personal spending. So think of this in terms of your own personal spending. If there are ways that you can shrink that monthly burden, obviously you have a lot less hours that you need to produce in order to generate profit for yourselves. Is this making sense? I know this is a more complex business example, but it's actually really applicable for your personal spending. Anybody have questions or thoughts on this?
Could you give an example, Laura?
Yes, so an example would be for your rent expense, right? So let's say you pay $3,000 in rent per month, and you can bill $100 an hour. right? So that would be your hourly revenue. So if we were to divide 3,000, your fixed monthly rent expense, by $100 an hour that you can charge as revenue, then you would have to work 30 hours in order to cover that fixed monthly expense. Does that make sense? So everything above 30 hours would be pure profit for you. So what if instead of paying $3,000 a month in rent, we could pay $2,000 a month in rent? Then we would only have to work 20 hours to cover our burden, that rent burden, and everything above 20 hours that we work would be pure profit for us. Does that make sense? So we want to look at how many hours it takes for you to cover your fixed expenses. Because if that number, like for example, if that number comes out to more than 40 hours a week, we know we have a problem, right? We know we're spending more than we can possibly manage and never be able to get ahead of that, right? So it forces us to look in two places. We have to look at the price that we're charging, and then we have to look at our expenses and make sure that the price we're charging is squeezing enough out of every hour of our work to cover that expense. So that was the initial comment that we made about the profit margin and the top of that income statement being healthy. Because if that number isn't high enough, you might have to work 1,000 hours a month, right? And there aren't even 1,000 hours a month. You would have to work forever to try to cover that fixed monthly expense. If you're only charging, $20 an hour, right? It's going to take a lot more time, a lot more of your time to cover $3,000 a month than if you could charge $100 an hour. That's a very simplistic notion, of course. I know you guys all know that, but we might not have thought of it in terms of the bare minimum or the break-even point just to cover our expenses before we can begin getting to all the good parts of life, like having savings, being able to travel when we can all travel again. And I know we're probably all desperate to do that. So when we can have a travel fund, when we can have healthy savings, right? We have an emergency fund, a couple months of rent set aside for if and when, the timing of payments doesn't come through, to go back to some of the initial comments about, income coming in inconsistently. For freelancers especially, we need a cushion, right? We need a healthy savings account because our rent comes out every month, whether we have income coming in or not. And so we need to know that some months our cash flow is going to be high, some months it's going to be lower, and we need to know that we can still pay our rent. So that's especially important for freelancers to have a really healthy break-even point, meaning it doesn't take you a ton of hours to cover your fixed expenses, so that in certain months, if those hours are a bit lower, if we didn't work as much as we maybe are planning to a month later or in previous months, we know that we can still make our rent expense. Does that make sense to everybody? Yeah, so we want the lowest break-even point possible. We want to be charging the most per hour, or we want to have the most profit squeezed out of every hour of our work so that we can reach our break-even point much faster. And then everything after that is a bonus for us. That's profit. That's our savings. That's a 401k. That's a retirement fund. That's our travel fund, right? All the fun stuff. Okay, I think I've covered this point to death. And you're probably all ready to hear about something else. If anyone has other questions on that, let me know. But as I said, that's a really powerful notion for managing your expenses. Okay. I'm going to skip over this because I don't think that's quite relevant for what we're covering today. So I want to talk about I don't want to talk about COVID. I think we've all heard enough about COVID, but I do want to mention there's an opportunity, well, we all have maybe some free time to look at where our revenue is coming from. And there's a really important notion here about diversifying your revenue. So for all of you, does any one client or any one income source make up more than 10% of all of the revenue that you generate? Yes. So that's a bit of a scary place to be, right? So I want to flag that for everybody and make this a goal for us to work towards. Again, I know a lot of these things I'm saying, these are, best practices in a perfect scenario. And we know that we're very far from a perfect scenario right now. So it's a goal to work towards. It's really just something to make a note of and to try to be mindful of, because we want to have comfort in our financials, right? We don't want to have anxiety. We don't want to have stress. We don't want to be kept up at night worrying about if we're going to make our rent. So a lot of that comes from, number one, making sure that your fixed expenses are not too high. But number two, looking at where all of your revenue is coming from And if worst case scenario, some of that revenue went away, even if it was temporarily, or if worst case scenario, it went away entirely, we're not 100% dependent on that income source to live our lives. So as freelancers, especially because this isn't W-2 income, because there's, not necessarily the same kind of warning or, protection that we would have as a W-2 employee, your revenue could go away at any time, right? If you're working on a project, that project ends, you go away. So make sure that you have multiple streams coming in so that if one goes away, you can still live off of the other ones. And you have a little bit of time, a little bit of a cushion to build that income back up. That's a really important thing to think of. So diversification, I challenge you all to work on that if you can. I also want you to look at your most profitable customers. So try to figure out what it is about those customers that makes them so great for you. Because we all have a mix of customers and clients that we love, some that we don't love, but maybe they're consistent and it's nice money coming in. Maybe it's not the highest profit, but it's good enough. There's different attributes of all of our income sources. I want you to find the ones that are like your dream client, right? They pay on time. They really value the work that you do. They pay you a rate that makes sense, that you're happy with. They're great to work with. Try to identify what qualities it is about that client that make them such a great fit for you. And then try to go find 5 more or 10 more. And I know that sounds silly, like they're a needle in a haystack. How do I find 5 or 10 more? But it's a really important exercise to go through because you should be working with all clients that love you, all clients that make sense for you, that pay you well. And those other ones are great as a short-term thing. But if we run our own business, right, and we all have the power to generate our own outcomes in whatever way we want them to be, take the time to find your dream clients. Go find more of them. Try to push it in the direction that makes the most sense for you. You'll still have to settle for some clients that you don't love quite as much, but now's a great time to try to figure out what it is about the ones that really work well for you, and then try to find more that look just like them. Okay. I'm gonna keep moving on here. So an important thing to mention, again, not to focus too much on COVID, but obviously, this is actually a really good time. Hopefully you're finding this to be true in your own experiences, but I think this has been a great time for freelancers and contractors because a lot of people are not willing to make full-time hires right now with so much uncertainty. So they're looking a lot for people like you who are willing to take tiny projects or tiny chunks of work or part-time work. So don't be afraid to be really aggressive reaching out to companies. And I know that sounds kind of counterintuitive, but remember that almost every company, every small business has received tremendous funding as a result of COVID. So COVID has actually been great for businesses. Don't be fooled by the news. Everybody got a PPP loan to cover their payroll, and everybody got an emergency loan from the SBA, from the Small Business Administration. So don't be afraid to reach out. They have money available. They have money. Yes, Veronica, please go ahead.
So would you say that LinkedIn is a great platform to make relationships?
Sure. Yes. LinkedIn is kind of like, it really depends on the people that are on there. You can absolutely reach out. You can do cold emails and cold calls. You can look through your network, of course. But yes, LinkedIn is always a great starting point. It all depends on how open people are to receiving those types of messages. I'm sure we all get some and we look at it and go, okay, that's bizarre. I'm never gonna respond to that person, right? And then there's some things that look totally legitimate and you're thrilled that somebody found you and they sound like they'll be a great contact. So it really depends on your approach and that you're not spamming people. But I think if you make a case for why the relationship makes sense, like if you obviously personalizing it is really important. So, hey, I love your company, really admire the work that you do. I especially love this thing that you did recently. These are my skill sets. I would love to contribute to the work that you're doing. And here's how I think I'd be a great fit. Something like that is a really compelling read. It's not just a spamming like, hey, I'm looking for work. Do you happen to have any work, right? Obviously, I know you guys wouldn't do that, but make it something meaningful, make it something personal. And I think, yes, you'll probably have great success. Yeah, okay. So that's my public service announcement about freelance work right now. I think a lot of people have been very timid, and I want to encourage you to not be timid because businesses have money. I know some businesses that are just looking for ways to spend money. Like they're saying, oh, I guess we'll spend more on marketing right now, things that they would typically never do, that they would be really, really tight on. there's money available. So there's funding. Businesses have been funded. So they're looking for help. Don't be afraid to reach out to them. I would also remind you to be opportunistic right now, right? Constraint is the birth of innovation. This is a great time to reimagine how businesses might be using freelancers, right? Maybe in areas where they would have had a full-time employee, they find that they never really needed a full-time employee. And maybe they love the idea of bringing in different contractors and freelancers to generate new ideas, or, just to have something that they can fully outsource and not have to manage somebody on. So be very creative about how businesses are looking at talent and what opportunities you see in the marketplace to reinvent yourself. This is a great time to do that. So again, I know there's a lot of stress around money right now. Let's feel all of that stress and then put it in a bucket for later. And then really try to think about ways to reinvent and pivot and serve businesses in a new way that they might not have needed or thought of before, because there's a lot of opportunity for that. And I really think you guys can succeed. Okay, let's take a second. If you haven't already taken some notes, take a second to jot down some ideas. As I said, I'd like these sessions to be really interactive and more of a working session for you. So I want you to just take 60 seconds and write down one thing you want to change, or one thing you want to research, or one thing you want to make progress on based on the things that we've talked about. And then we'll move on to some other exciting content. Okay, let you finish jotting down some ideas. The next thing I want to talk about is something called financial management. So financial management is just a very fancy way of saying you need to have a plan in place for your financials, both your business and your personal financials, and have a process for monitoring that plan. That's all we mean by financial management. You have to set a goal, and then we need to see how we're tracking against that goal, because if we don't pay attention to it, we don't just suddenly arrive at our goal, as you all know, right? It's not like, oh, that's what I want to do, and then poof, it happened and I'm here. We have to really actively pull ourselves along that plan, make changes along the way if our plan isn't working, or if, a resource we thought we had, we don't have, and we need to find a better version of. There's all sorts of scenarios, but we have to be mindful. It has to be an active part of our lives to achieve our financial goals and all of our goals, as we know. But I think the financial goals are often scary and people don't quite know how to get there. And so we kind of forget that about, reaching a goal, because if it's not obvious how to achieve it, sometimes we just ignore it completely. So again, these are big business best practices, but I want you to apply them to your lives as well, and to your businesses. So every business should check in on their financials in these time frames: weekly, monthly, and quarterly. Okay. So your first objective is to create a budget. So I want you to create a budget of what you think your financials should look like from a personal and then a financial basis. So have a goal in mind for what you want your revenue to be. Have a wildly big goal in mind. I don't want you to be thinking of, oh, this is what I need to cover my personal expenses, and as long as I hit that, I guess I'm okay. I want you to have a big goal, because here's a secret that you probably may or may not already know. If you don't think about it, it's never going to become part of your DNA up here. So put a number on it. Say, I want to make $300,000. I don't care if that's wildly optimistic, completely laughable and unreasonable. I'm not saying you're going to make that this year or tomorrow, but put a number on it. Put a number on it, and then understand what it takes to reach that number. Because getting that on paper brings you 10 steps closer to actually making that a reality. If we never even let it get into our brains and it seems so outrageous and outlandish, guess what? You're never going to get there, because you're already discouraging yourself. So put it out there, put a number down, and then try to figure out the plan to get there. And even if you get halfway there, that's probably a lot further than you would have gotten if you didn't think about it in the first place. Okay. So put some numbers to it, put a goal in place for this year, and then, your ultimate goal, say for the next 5 years where you'd like to be ultimately. And there'll be different plans to get to that number compared to where you want to be a year from now, but be a bit aggressive, push yourself a little bit, because you're going to get there a lot faster than you think. I guarantee it. If you actually believe in it and you actually put a plan in place to get there. So number one is putting a plan in place. Get your revenue goal in mind, get your profit goal in mind, how much you'd like to be saving each month, and put that in writing, and then hold yourself to that. And here's how we hold yourself to that: weekly, monthly, and quarterly. So weekly, we need to understand what are the key metrics that help you achieve that goal. So does that mean you need to be making 10 business development calls, right? You need to be taking 10 virtual meetings with potential new clients or referral partners who know the clients that you want to be working with. Is there a mentor that you want to get in touch with? Are there expenses that you need to be cutting, right? Does that mean we don't get takeout for a while? So for personal spending, the little tiny choices that we made and we kind of just treat as normal are what kill your budget. They kill your budget. So takeout, we think of it in small increments, like, oh, it's $20. Oh, that's $30. Oh, that was just $15. That kills your budget, because that $20 becomes $100 really fast. And that $100 becomes $400 a month really fast. And $400 a month is a real number, right? That's a real number. So I will encourage you to look at those little daily and weekly choices that you're making. Try to put a number on it. Okay, I'm only going to get takeout once a week. And it's only going to be in absolute dire circumstances when I was working ridiculous hours that day and I didn't have time to grocery shop. I didn't have time to meal plan, and I didn't have time to make myself dinner, right? It's okay to be human. We're not saying that you have to be a robot and that you can never go outside of your rules, of course. But know what the rules should be, because once you know what it is, you'll adapt to it pretty quickly. And you're going to feel really great when you have all that extra money in your checking account to do something fun with, right? Takeout will not keep you warm at night. Takeout will not go on vacation with you, right? Think of the goals behind these numbers, and they'll suddenly become really, really powerful. So that's number one. Look at the weekly, the daily behavioral, the weekly behavioral things that will accomplish the big goal that you set, so that you can check on yourself every week. Because that big number is a big number, and it's hard to humanize that. But when we think of that big number converted into little daily and weekly things, that we can make sense of, okay? So step one is looking at your weekly metrics. Step two is looking at your monthly financials. So every month, I want you to download your bank activity. I want you to look at what your revenue was. I want you to look at what your business expenses were and your personal expenses, and see what your profit is. Is your model working? Does that model work? Are you netting profit every month? If not, we need to go back to that break-even analysis and make sure that you're generating enough profit, number one, that your costs aren't too expensive. Number two, if we don't look at that every month, we're not paying close enough attention to make progress. So it just has to become part of your lifestyle. It just has to, and it doesn't have to take days and weeks to do this analysis. Spend an hour at the end of every month just looking at how your revenue compares to your expenses, how your revenue compares to your pipeline, right? So now we look at, okay, here's what came in this month. Here's what the last few months have looked like. Is this okay because I know that I've got these major projects coming through in the next 3 months that are going to balance all that out? Or do I have nothing coming through in the next 3 months and I'm in trouble and I need to get a plan in place, right? So the more we start looking at our numbers on a consistent basis, the more familiar we become, the more we start thinking with a business mindset of what our revenue should look like for the year, how we're tracking against that. If maybe we need to work more on business development this month because we know the next few months are going to be slow. It just becomes part of what you do in all other aspects of your business. But oftentimes the financial goal setting is overlooked, but it's a really important part of what you do. So again, it doesn't have to take a long time. Spend an hour every month looking at what happened and then trying to figure out what you need to do for the next 3 months. Okay. Lastly, quarterly, I want you to revisit that budget that you put together, that big vision, that goal, and see if it still makes sense for you. Do you still want to achieve that goal? Do you still like it? Does it still fit your objectives? Does it still feel right to you? Does it seem realistic based on outside circumstances? So for example, at the end of last year, every business and every person put together an expectation of what they wanted to achieve in 2020. Then January and February came, and those budgets are nowhere to be found anymore, right? It's a completely different world, and that's okay. But we need to check in on that regularly to make sure that we're not following the wrong goal. So quarterly, we look at that big picture again and make sure it still feels right to us. And if not, what do we need to change? And how does our behavior need to change for the rest of the year? Okay, so that's it. That's financial management. That's what every big business does. That's what you guys can do for your business financials and your personal financials. It doesn't have to be complicated. Don't be scared by this process. It's really just a process of setting a goal and making sure you check in with yourself regularly. So I would encourage you, just as a little kind of mindset shift, book these on your calendar. Go on your phones right now, book a weekly meeting with yourself at the end of every, whatever works for you. If it's on a Sunday morning or Friday afternoon or Monday morning, whatever works for you that you can consistently hit, because consistency is the key for all of this. Book a meeting with yourself every week, at the end of every month, and at the end of every quarter, so that you can, without fail, check in at these scheduled times. It's really, really, really important. Really important, okay? So I would encourage you all to do that. We talked about all of this, that's fine. Here's my desperate plea, set your calendar time now. It's so important. Even if you get to that day and you say, oh gosh, this is a terrible day, I can't do this today, reschedule it for the next day. You can put 5 minutes on your calendar, honestly. It doesn't have to take a bunch of your time, but just the process of checking in with yourself, I guarantee you, will infiltrate your thinking, will infiltrate your behavior and your choices, and you will just become much more mindful of your revenue sources and your expenses. And even if you don't have a ton of time to do financial analysis extraordinaire kind of work, the thought of checking in with yourself will change your behavior alone. It's a great first step, okay? I would encourage you to look at your financial team as well. So obviously there's people like me that can work with you on just an hourly basis, even if it's 1 hour a month, helping you put a plan together, looking at your financials, understanding your cost structure. If you have a bookkeeper, I know a lot of solopreneurs and small businesses have a bookkeeper. Your bookkeeper is a great transactional person, but they're not going to help you understand the big picture. And so don't look to them for that. The same is true for a tax preparer. I'm sure a lot of people have gone to their tax preparer and said, help me figure out a plan, right? Help me understand my numbers. Why do I not have enough profit, or what's going on with this expense? That's not their realm, right? Their job is to help you with compliance, to file forms, and to help you minimize your taxes. And they do a great job at that, and we love them for that. And so let them stay in their lane and don't look to them for other stuff, because oftentimes people end up switching their tax preparers because they say, oh, I'm not getting enough from them. I'm not getting the support I need. But really, it's not their fault. It's because that's not their skill set, right? So make sure we have all of these people on your financial team. You don't need to pay salaries to these people, right? You don't need to spend a lot of money. But make sure you know one of each of these people. Know a tax preparer, or do your own taxes if they're simple enough. I'm all for that. I don't think you necessarily need a tax preparer. But if you want one, know a tax preparer and only look to them for taxes. If you need some strategic goal setting and budgeting advice, look to a CFO like me. If you need a bookkeeper to help you with your transactions, if you want to have a QuickBooks file and import all of your bank activity and watch that once a month, have a bookkeeper to help you with that. Make sure we know who's being used for what purpose, because if we get confused by that, we get disappointed, and we also don't get the right information. Okay, one more public service announcement. So you don't need to be a CFO, okay? Let me make that abundantly clear. No one's expecting you to be an expert at any of this, but you do need to act like a CEO, right? You are in charge of your business. Your role is the role of a CEO. You must be in charge of driving your business. You must be in charge of managing your expenses. You must be in charge of setting your prices. You must be in charge of making sure that there's new business next month. So this business development role is very important. So I want you all to fully embrace that title, right? Title of CEO of your business and of your life, because once you get into that mindset, I think where you place your time will change drastically. So if your time could be spent on an administrative task versus finding, a new dream client, it should probably go to finding a new dream client, right? And oftentimes we spend the time on the things that we know and that are easy and satisfying to cross off the list, but maybe are not value added. So I really want you all to try to elevate yourselves. And side note, I also know that as a solopreneur, there's no one else you can point to do these things, so you have to do them at some point. But really try to focus your time on your highest and best purpose for your business, which is to grow your business, which is to manage important relationships, and to deliver high quality work, right? That's what you all are responsible for doing. So don't overlook that. You are a CEO. You have to have a strategy for your business. You have to have a goal, and you have to be the one to stay accountable to it, okay? And there's people like me, obviously, that can help you with weekly and monthly accountabilities and check-ins. You can get a coach. There's all sorts of things you can do on a cash tight budget, but embrace that role of CEO. Okay, so take a second again to write down some changes you'd like to make, questions you have, goals that you'd like to set for yourselves, things that you need to look into a little bit in this kind of category of financial management, looking at our numbers, being a CEO of our business.
Laura, can I ask you a question?
Please.
Just wondering, do you have time to meet with artists? Or I think that's something that I should have said at the beginning too, like kind of realizing as an artist, not putting myself below other businesses that seem to be much more important, you know, and reaching out to people like you, like, would you even want to work with an artist? So I appreciate so much that first you're doing this workshop, and I assume that you probably do work with artists, and just wondering how that works.
You're a business. You are a business. You're just a one-person business, but it's the same considerations. It's exactly the same considerations. So that's why I'm so kind of insistent on using these business terms, because I think a lot of times it is a mindset. And so you're a great example of this. I'm just one person. Does this all really apply to me? Would you even want to help somebody like me? Yes. Do you want to make money?
Yes,
right? I'm a CFO,
yes.
I work with you. If you want to make money, then I want to work with you. And I work with nonprofits too. So let me just correct that. Even if we don't look at generating value and wealth in traditional terms, if we are striving for a goal and money is a tool to help us reach that goal, then yes, absolutely. All of the same tools apply. All of the same tools apply. So yes, don't lower yourself in that way. You deserve to reach your goals just as much as the 10,000 employee business does. It's the same thing. It's exactly the same thing. And really more fun because you're actually in control of all the choices that you can make, right? As opposed to these bigger businesses that have restrictions and they can't fully achieve their goals in the same time frame or to the same extent. So for solopreneurs and small business founders and entrepreneurs, we get to control our own outcomes really easily. So it's really fun and really rewarding. So yes, absolutely.
Great. Thank you. Thanks. This is so wonderful.
Oh, good. I'm so glad. Okay. So we'll just cover one more section here, and that's personal finance stuff, which we've already touched on a little bit of this already throughout the slides, but just some little tidbits that I hope will be helpful. Again, this first point is aspirational. And so I say that with no arrogance. I don't expect you all to have massive savings accounts, but I say this as a goal for all of you to work towards. And this, let me say, I'm sure half of the people in the world don't have this large of a savings account, but it's a best practice to work towards, okay? So half of your income goes to your living expenses, half of your income should go to your savings and your retirement. And again, as freelancers, this is especially important because our income comes in inconsistently, right? We don't get a scheduled payroll deposit every 2 weeks. So we sometimes don't know if our client's gonna pay us on time, and we hope and pray that they do. But if they don't, we know that we have that cushion available to help us. So this again is aspirational, but I want you to be working towards that. If we don't reach this number, that's okay. Even if we have, 70% of our income going to expenses and 30% going to savings, I just don't want you to be living paycheck to paycheck because nobody likes to live there. That is not a happy place, right? That's a scary, stressful, keeping us up at night kind of place to be in our financials. And we all deserve much better than that. So you can actually focus on living and not worry about spending. So just work towards that number. Even if you don't get to that 50-50 split, work towards it because that means more savings for you, more cushion when clients pay late, more life living later on. So we're not working until we're 90, right? We want to make sure that we're building some sort of retirement, and that happens by putting away big chunks earlier on. So again, there's no judgment in this number. I just want you to be working towards it as we all are working towards that number, whether you're a freelancer or not. Something that I think a lot of people don't know of if they're not a W-2 employee, you can still set aside for retirement in a tax-free way. So if you don't have a retirement fund, look up something called a SEP IRA. It's called a self-employed IRA. And this is tax-free, just like a 401k would be. So only W-2 employees can use a 401k. So it's the same concept, but it's not called a 401k. So if you thought, oh, I don't work for somebody, so I don't have anyone to contribute to a plan for me, therefore I don't get to save for my retirement, not true. You absolutely can, and you get all of the same benefits, except you don't get an employer match, of course, so you are your own employer. But you can put it away. I think the most recent number was $54,000. You can put into this tax-free account. So if you made more than that, if you have that much income and you're able to put away up to $54,000 annually into this account tax-free before the IRS starts taxing you. So it's a really, really great program. So look into that. You can contribute to it up until the filing date for the taxes. So for this year, it would have been July 15th. For next year, that's April 15th. So it doesn't have to be contributed to by 12/31. You have until April 15th, 2021 to open up a plan and contribute to it for your 2020 taxes. Okay, so it's really great. Tax-free savings. Yes, go ahead, Veronica.
So you said the SEP IRA.
Yep.
The difference between that and a regular IRA.
It's just that it's for self-employed. Yep. So SEP stands for self-employed. So typically a lot of contractors aren't able to save for their retirement because they don't know that there's a fund that exists for that. So it's exactly like a 401k. It's just that 401ks are only for employees, and you guys, maybe you're part-time employees for certain clients, but not full-time employees, and maybe don't get the benefit of contributing to your 401k. So it works the same way. It just means the money comes out of your gross wages. It goes to a tax-free account. You don't get taxed on that income, but it's saved, and it has the same restrictions, right? You can't pull out of it just like you can't take out of a 401k. So it's really meant to just be for retirement. There would be penalties and you would be taxed on that money coming out, just like if you took money out of a 401k, okay? So I just mentioned that because I know I found that a lot of contractors think they can't save, and you absolutely can. It's just called something different. And you can get this through, any of your brokerage accounts. You can go through Merrill Lynch. Any of your commercial banks should have the ability to open up your own SEP IRA, okay? This is going back to our concept of savings. I want you to think of, if we can't get to that 50-50 income split, you can also think of just setting aside monthly expenses as reserves, right? So what would be your fixed monthly expenses, your rent, your car payment, your insurance? Try to put 2 months of that in a separate account and don't touch it, so that we know that if a client goes away, if we haven't diversified our income or been able to do that, and we lose a client, we still have the ability to cover our payroll to ourselves, right, for at least 2 months. So that's a nice goal to work towards. As I mentioned, all of our money goes in those little daily habits. So when it comes to personal finance, I really encourage you to download all of your expenses from your credit card or from your bank account and your debit cards, and look at where the money is going. You might be shocked to find how much you're spending on things that you didn't even realize. So if you do that for the full year, for example, you might be shocked to find that you spend like 20 grand on takeout, right? It happens and we don't notice it because it's all those little daily things. So once you become aware of those choices, you can change them and you can take back all of your money, right? This is your money that you're working so hard for. Don't give it away on stupid things. And the same is true for subscriptions, right? A lot of us we have Netflix, and now we have Spotify, and now we have Amazon Music. All of those little things, right? Then we have Apple TV, and it all sounds like, oh, it's just $6.99. Oh, it's just $9.99. But then when we have 5 of them, and then we pay 12 months worth, and obviously, all of you are in entertainment, so I'm not undervaluing the importance of entertainment by any means. We all need these things to live happy lives, but maybe we make choices between them. Maybe we don't need all of them. Maybe we need a couple of them, and not just entertainment subscriptions, right? It's everything. Maybe we have, magazine subscriptions or things that we might not even realize we're still paying. They get taken out automatically without us noticing, and we forget about them. And then we pay years and years worth of them. So just take a minute and look at what's actually coming out of your account and make sure that every month you want that to be taken out of your account. I can guarantee you will find a couple $100 really easily just doing something as simple as that. Okay, let's keep going quickly just on some pandemic assistance things. If you have all heard of these things already, then please stop me. But it's worth mentioning quickly. If you're a sole proprietor, you are still eligible for a PPP loan. So if you thought that you couldn't apply for one, you absolutely can. They will just use your 2019 tax return or your 2018 tax return if you haven't filed 2019. You are absolutely eligible. Okay, so you would just apply through your bank. You can go to the SBA website and look for any bank that's offering PPP loans at the end of the tail end of this. You might get one, and they'll cover minimum number of your payroll to yourself, which is really great. So what they'll do is what your net earnings were last year, and then divide it by 12 and multiply it by 2. Yes, Judy, go ahead.
Is anyone else having trouble hearing Laura?
Oh.
Okay. Just checking. I think you're coming in quite fuzzy and quite digitally
Okay.
Yes.
glitchy.
Thank you for letting me know. All right, is that better?
Yeah.
Yes, okay, thank you for letting me know. Okay, so I was just saying PPP is eligible for everybody that's self-employed. If you would like, you just go to your bank, go to the SBA website to find banks that are offering this, and they'll look at your 2019 net income on your tax return, divide it by 12 and multiply it by 2. So they'll give you 2 months worth of your income that you can use to pay yourself, okay? So that's something that's worth looking into. The SBA emergency loan is available for if you are a business entity. So if you have an LLC, you can apply for this. If you're a sole proprietor, you're not eligible, unfortunately. But if you have an LLC or you operate through a business, you can apply for this emergency loan. Pandemic unemployment is hopefully something that all of you have applied for already. If you haven't, this is available for contractors now. It typically is not available for the solopreneur or self-employed or contractor, but because of COVID, it is. So if your income has been reduced, you simply go on the CAEDD website, and it's a really quick application process, and they'll have you funded within a couple weeks. And you can get $167 a week at a minimum, and possibly an extra $400 a week based on what your income level was last year. Okay, so that's absolutely worth looking into. This is taxable income, so just be aware of that. If you do get these benefits, make sure you're setting aside, 20% of it for your taxes, for example. If you were a W-2 employee who lost your job, apply for, even if you were a part-time employee, apply for regular unemployment. Don't apply for the pandemic unemployment, because you might get more under the regular unemployment. Okay, so it's important that you apply for the one that fits you. And if you think you were misclassified as a contractor, but really you were a W-2 employee, apply for the regular unemployment as well. Okay, because you'll get more under the regular unemployment. Okay, so any questions on this? Take a second to look at any of this and see if you'd like to apply for these things, take a note, and get those benefits, because they're available and they're easy to apply for, and you all deserve all of them, and they're kind of no questions asked, easy money. Okay.
I have a quick question.
Yes.
So what's the benefit if I'm doing business as an individual? Like what would drive me to get a DBA or incorporate or any of those other things?
Great question.
I've asked this question to so many people, and I still feel a little bit anomalous about it.
Okay, so really it comes down to two things: taxes and risk, right? So really, if we think of you as a person compared to you as a business entity, if you feel like you're going to get sued and you don't want someone to go after your personal assets, you would want to get an LLC. That's really the biggest differentiator. For an LLC, you have to pay a minimum of $800 a year in the state of California to maintain that LLC. So a lot of people forget that, and then they realize, oh gosh, I'm paying this number. And if it really doesn't make much of a difference, maybe we don't need to have the LLC. So really it's thinking of the type of work that you're doing. And if you feel like there's a risk of getting sued or a risk of any sort of liability, that you would want some separation between you, the person, and you, the business. So ask yourself, do you think that there's a worst case scenario there that could go wrong, where someone would sue you and try to seize all of your assets?
I can't picture it, not as a voice actor and not as an audio engineer either.
It's probably,
at least it's pretty unheard of, but could happen, I guess.
Certainly could. And so you weigh the risks and the rewards of that, right? What's the likelihood of that happening? What would be the impact of that compared to having to pay the $800 a year at a minimum? And then you have to file, you can file them on the same tax return. So if you're a single member LLC, meaning it's only you don't have any other owners, you would just file it on your same personal tax return. So there's not really an extra tax burden, reporting burden associated with that. It's just the extra $800 that you have to spend. So you can also bring employees in, of course. It allows you to start operating in a more formal way if you would like to. You can bring employees in. You can have a DBA. You can put yourself out into the market as a different name if you don't want to be known as Judy, and you could be known as JL and Associates, and it sounds more formal, and people like that sometimes. So it really is sometimes for optics as well. I will say that a lot of times larger companies require for their own risk exposure, they require their contractors to run through an LLC. So they might say, we will only pay an LLC independent contractor. We won't pay just a sole proprietor. And so if you are encountering that a lot and it's, inhibiting your ability to grow your business, then you might need to consider it. But again, that really just depends on if that's what you're seeing from your client base. Does that help answer the question?
Absolutely. Yeah. Thank you so much. Yeah.
You got an answer that makes sense. Okay, good. I'm glad. What other questions do people have? I know we covered a lot, and it's a lot all over the place, big business stuff and personal finance stuff. I'm going to take a look at the comments here and make sure that we're covering everything that people need.
I have a quick question.
Please, yes.
With the PPP loans, would that be closer to like a grant, or would you actually have to return the money that you were loaned?
Great question. Yeah, so PPP is a grant if you meet the criteria. So let me explain what that means. And for you all, if you're sole proprietors, you will meet the criteria, because really it was intended to prevent mass layoffs and unemployment during this time of crisis. So it was intended just to cover payroll. So 75% of it has to cover payroll, and then 25% of it can cover things like rent and utilities and a few other smaller things, but really rent and utilities and payroll. For all of you, if you're self-employed, all of your income goes to pay yourself, right? You're not taking money from the hours that you're putting in and giving it to somebody else typically. So all of your money would go to yourself. So if they look at the net profit from your tax return last year and divide that by 12 and multiply it by 2, that's what they'll give you as a lump sum. What I would recommend doing is putting that in a separate savings account and treating that as your funding. And then you just pull, half of that out for 2 months. So you split it into 2 payments and pull that out and move it into your personal checking account. And that will show payment going from that loan to you. And that will be very clear record keeping for the bank to understand that the money went to you to pay your personal expenses. That was your wages for those 2 months. And then that will be forgiven. They just don't want you to say, oh, we need money to cover our employees. And then you go hire this consultant that helps you, transform your business. It has nothing to do with paying your people. They want to make sure that the purpose is matching the actual use. So as long as you use it to pay yourself, it will be forgiven.
Can you go over that procedure just one more time? Just you transfer the transfer procedure?
Yeah, so this would be my recommendation. And the reason why is because the bank is going to ask for evidence of how the funds were used, right? So they're going to trust you to use them correctly. And then after the fact, this is the forgiveness process that you might have heard of. Then after the fact, they're going to say, fill out this form and confirm that you used it for the right purposes, and then show us the evidence of that. So if you were a larger company, you would just show the payroll reports and say, here's the amount, here was it coming out of the bank account, that's what it was used for, please forgive this balance. For sole proprietors, it's a bit more challenging because you kind of mix all of your business and personal all together. So I would encourage you to create some separation for this purpose if you can. So if you don't have a savings account, try to open up a savings account and move that funding into the savings account. So let's say they give you 20 grand, right, as a lump sum to cover 2 months of your wages to yourself. Put that 20 grand in that savings account. And then at the end of the first month, move 10,000 over to your personal checking. And at the end of the second month, moving the rest of the 10,000 over to your personal checking to show that that was you paying yourself from the funding. And again, it's just easy record keeping for them so that you don't have to download your personal checking account with all of your deductions coming out and all of the contract money coming in and trying to explain to them how the 20 grand was used to cover those things. It invites a lot more questions. And with this kind of compliance stuff, you want to lead them down the path to the answer that you want them to receive instead of giving them more data than they need, and therefore more opportunities to ask questions and challenge you. So that would be my recommendation. It's not a requirement for the loan by any means, but it's just a nice, easy way to manage the forgiveness process so that it's kind of an easy.
Awesome. If you put it into a savings account, though, isn't there a penalty for taking that out early or?
No penalty. So not a retirement account, not something like a tax account, a 401k or the SEP IRA.
Oh, okay, gotcha.
Savings account with your bank. Yeah, just a regular savings account.
Gotcha.
Mm-hmm. Other questions? Yeah, go ahead, Christy.
Yeah. I understand if you don't want to do this because this was already such a wonderful and free workshop, but would it be possible to have a copy of your presentation, or do you prefer not? I understand.
Yeah, absolutely. I can send it to, you can send me an email if you like, or I can send it
Okay.
you can distribute it. Here's my information down here. If you want to reach out to me, I'm more than happy to
Oh
send
yeah. Thank you very, very much. This is
Sure.
amazing.
Yeah, absolutely. Happy to help. I know we're at the 12 o'clock mark, so I don't want to keep people longer than you signed up for, but I'm happy to stick around if anybody has other questions. If not, I can hand it back to Julian and he can wrap up. Julian, are you there? Or do you need to wrap up, or should I just
No, I'm here. You can keep going if everyone wants to stay on, or you can cut it. It's completely up to you.
Does anyone have other questions? Yes.
You know what? I have one more. Oh, sorry. Was Veronica? Were you trying to speak? Okay, just real quick. Because I have no experience with having a financial advisor or somebody that I go to for financial advice, what should I be expecting to spend with that, or like what's the range of like what I should be expecting to, a range of a cost, I guess, is what I'm asking.
Great question. So if you're
Sure.
looking for like an investment advisor, when you say financial advisor?
No, somebody just to like kind of help with my personal finances, kind of like
Yeah. So the reason I ask is because investment advisors typically they operate on a different model where they would often have their profits tied to how your investments are performing, and that's to make sure their incentives are aligned and that they're not recommending things that don't work out for you, right? And so that's an important distinction. If you're just looking for sort of general, I'm going to call it financial coaching, somebody like me, I would just charge an hourly rate. So my hourly rate is $250 an hour. So I work with a lot of solopreneurs and startups and smaller businesses who can't afford, the big monthly retainer, but still need just a high level check-in. And I think oftentimes, your decisions are very quick. Your choices are usually pretty easy to make, and you sometimes already know where you need to head. It's just a matter of getting someone to say, yes, that's the right thing. So we oftentimes don't need to spend a ton of time together. It's really just helping you set up the framework. So maybe we would put together your budget together and then kind of check in on a monthly basis and make sure how you're tracking to budget makes sense, or be, ad hoc if you have a question and you call and we need to talk through something, but it doesn't need to be sort of a big exhaustive relationship. I think that sometimes where people get concerned and they feel like, okay, now I need to hire this person on retainer and manage this expense. And it can be very, very light compared to that sort of big obligation. It's really just giving you the information you need when you need it in bite-sized pieces, and it can be charged in 15-minute increments or an hour. But typically for freelancers and entrepreneurs of the size of you guys on this call, I would say 1 hour a month at $250 an hour is typically the package that I would offer. And I think that's consistent for others as well. I'm not saying you have to hire me. I'm using me as an example because I think that's pretty market rate for. Look, you can charge. Some people charge $600 an hour, like an attorney. Some people charge $900 an hour, but usually that's because they have big offices and big overhead that sucks up a lot of that budget, which is why their market rates are so high. But you might find anything from where I am all the way up to $900 an hour, depending on how complex your business is.
Gotcha. Thank you so much. That's what I needed to know.
You had a question? Sure, yeah.
This may be, I don't know, relevant or irrelevant or whatnot. Let's say someone has a podcast. How would you go about, is it possible to even get it monetized, or is that even an option or at that point?
Great question. So podcasts are typically monetized through advertising. And so in order for that to make sense for an advertiser, you have to have a really clear understanding of who your audience is and obviously have enough followers for it to make sense. So you might just get a sponsor for each individual session. You might get a sponsor for the whole season, but make sure you have a clear audience. If it's not for every single episode, you have if it's not for the whole season, it could vary. I know some people do podcasts with one subject for each session. So the audience might vary based on who's interested in that topic. If that's the case, just make sure you have a sponsor that ties to that subject matter and you can say with some evidence with some understanding of your audience, that their audience is, matching who you're speaking to. And then you have a pretty great foundation to charge some advertising revenue. And obviously donations too. I know a lot of people are taking donations for podcasts. That's obviously less consistent. It's not as great as going to a corporate sponsor because they have a bigger budget. So the better you get at building an audience and generating a loyal following and knowing who your audience is and being able to match an advertiser who would like to speak to that audience, the better chance you'll have of generating some ad revenue. Other questions? No? Okay, well, please feel free to reach out if you have any questions or need help in the future. We've got my email here. It was lovely meeting all of you. I hope this was helpful. I will send, if you send me an email, I'll send the PowerPoint to you. And happy to be a resource. Hope you guys all take care. Stay well.
Thank you so much, Laura.
Take care, guys. Nice meeting you.
Thank you. So nice to meet you.
Thank you for all the info.
Thank you so much. This was amazing.
Yes.
Thank you. Super helpful. Tons of notes. Thank you.